$4 billion left Bitcoin ETFs in June alone, the exact institutional money these products were designed to attract. It's the worst month since the funds launched in January 2024, and 14% larger than any previous exodus. BlackRock's IBIT, the industry's largest fund, accounted for $3.3 billion of that, roughly three-quarters of the total. Between May and June, nearly $6.5 billion walked out the door in what analysts are calling sustained institutional de-risking. The mechanism is straightforward. When the 10-year Treasury yield climbed above 3.5% after a strong jobs report, institutions looked at non-yielding Bitcoin and chose the guaranteed return instead. Hedge funds led the retreat. In the first quarter of 2026, institutional investors reduced their Bitcoin ETF holdings by 17%, from 313,000 Bitcoin to 261,000. That's 52,500 Bitcoin that simply left regulated portfolios. The irony is sharp. Spot Bitcoin ETFs were approved in January 2024 specifically to give institutions a safe, compliant way to hold Bitcoin. 2 years later, those same funds are processing the largest institutional exit in crypto history. The product built to bring Wall Street into Bitcoin became the door Wall Street used to leave. The Securities and Exchange Commission finalized a judgment against Nanobit, a cryptocurrency platform accused of defrauding investors by lying about operations and misappropriating funds. The settlement orders the company to pay over $5 million in fines and penalties. The case marks the conclusion of enforcement action against a platform that allegedly deceived investors through false representations and theft of customer assets. This ruling demonstrates the SEC's ongoing commitment to prosecuting fraud in cryptocurrency markets, sending a clear signal that platforms misrepresenting their services or stealing investor funds will face significant financial penalties. The case reflects the broader regulatory crackdown on crypto platforms that has intensified over the past 2 years as agencies work to establish enforcement precedents in the digital asset space.